All right, just so you know, Sean, we're now live on the platform. Like I said, in about 4 minutes, I'll give you the intro and then you can go ahead and get started.
Perfect.
Good morning for joining us for this virtual event. Today, I'm happy to introduce Sean Dienham. He's a petroleum geologist with 18 years of oil exploration experience. He has a history of generating successful prospects and executing them on time and on budget. Mr. Dienham enjoys the thrill of creating wealth by putting holes in the ground. And with that, the floor is yours.
Appreciate it. I'd like to welcome you guys today to talk about a little bit of oil projects, a little different than the conventional methods. A lot of people think of oil investments, they think of big oil, they think of the Exxon Mobils, the Chevrons, the EOGs, the Devons, investing in stocks, trading options, maybe some oil futures. Well, in contrast to that, what I do is put together projects and we drill the wells and you own an actual percentage of the well. So I'd like to go through a little bit of that, and I'm going to get started by with my quick little guide that I threw together just to explain the structure of these oil wells and how things work. So when you have an investment in an oil well, the working interest owners pay all the costs, and then the revenue is distributed to those working interest owners, and the landowner receives a royalty interest, and then there's an overriding royalty interest. So this pie chart here explains if you were the investor number one in the oil well, you'd be paying 50% of the costs, and you'd be receiving 40% of the oil at an 80% net revenue interest. So what that means is you want to have the biggest slice of the pie, and in order to do that, you're going to want to invest in projects where you receive a high net revenue interest. If you're paying for a percentage of the oil well, you should get an assigned working interest, in my opinion. If you're getting a unit, a share, some other interest that isn't recorded at the courthouse, it's going to be hard to liquidate. It's it's only fair that if you pay the money, you own the percentage of the well, and it's something that's marketable, and you get the oil every month, preferably from the crude oil purchaser, often the refinery. So when you're thinking about this or analyzing a project, you'd like to see what percent of your money is going into the project, what percent's going to the commissions, the marketing, the lawyer, or other stuff that isn't towards the oil project, and is that promote reasonable? And what percent from, and like I said before, what percent of the oil produced from the well do you own? So if you can get to the bottom of that and you can calculate the break even point and you can expect what reasonably you could expect the oil well to do, that would give you a good idea of what your possible returns are. You also want to know if you own the acreage or the well bore only. Is it depth restriction? Do they have a plan for the saltwater disposal? What type of oil is it? Is it sour oil? Does it have H2S that'll kill people? Is it low gravity? Is it high gravity? What pricing index is it paid from? Any pricing differential? Those are all real important to understand on any oil project that you get into. Also, there's before payout, after payout, back in after payout, waterfall distribution, all types of dilutions that can be in there that you need to know going into it. And then as far as the structure, is it turnkey? What's the timeline? Is the operator a little goofy? Are the tax benefits the best part of the deal? Are they drilling for hydrogen with AI lasers? There's a lot of goofy stuff going on there, and if it doesn't pass, common sense, or if it sounds a little wonky, you might want to stay away from it. And I found that the only certainty in the oil business is that when the rig shows up, you're spending money. So the upside potential, you want to make sure you're going into a project where you can make some money. So for my typical vertical shallow Kansas deals, we're risking about 4,000 barrels worth of oil, looking for 50,000 barrels to a 250,000 barrel field. Often you'll have to drill more than one well to get there, but if you find 250,000 barrels of oil, it doesn't really matter if you drill two or three little holes. It's going to be a great return. So with that, how many barrels does it take to break even? How much should the well be producing at that point? So, what's the well making on the day that you get your money back? And hopefully in Kansas, 10 barrels a day for the next 30 years, quite a bit of money. And on the shale wells, it's going to take a long time to get back, but the production's so much faster. Hopefully after you've been paid off, it's still making 50 barrels a day or more. Most everybody that's legitimate's using 3D seismic these days. That tells you that the structures, paleo structures in the ground down there, and then whether it's full of oil or there's some serendipity with the rock quality. And then another point that I'd like to bring up is that the decline curve. The first day of the oil well is going to be the day it makes the most, essentially, and it's going to go down. So if you see people making projections that it's going to make 50 barrels a day in a straight line for 10 years, you might be a little cautious. So the other side of that's when you go in, you spend a bunch of money and you do a big frac, you're gonna get a bunch of oil. But then down the road, when the production dwindles, you're gonna have expensive costs, possibly like clean outs or saltwater disposal issues, some refracs, and then depending on where you're at, the plug and abandon costs can be pretty high. So, in summary, if you calculate the break-even point and you understand the terms of the deal, you analyze the upside potential and the risk compared to your investment goals. Um, popular investment goals would be long-term additional revenue stream. You want to diversify your portfolio. You're looking for an inflation hedge, oil price speculation. You think oil's going to go up, or if you're trying to get rich real quick. Consider a strategy that blends aggressive low-cost exploration with low-cost resource plays. Consider purchasing existing oil production if you don't require the tax drilling incentives. A good way to hold on to some money would be to park it in some oil wells that are already producing. It's going to be low risk and it's going to continue paying you monthly mailbox money every month for a long time. There's a lot of other stuff out there that you could think about. I do some helium projects. There's crypto mining. There's carbon capture stuff. There's lots of exotic, wild stuff out there. Hydrogen's probably the wildest out of all of them. So with that brief intro, give you a little idea of how I think on that stuff. Get into this. So what I've been doing for the last 18 years is drilling vertical wells in Kansas. Kansas makes about $6 million of oil per day. There's been about a 500,000 barrels drilled, or half a million wells drilled in Kansas. It's great because there's a large local network of vendors. We can get services quick, fast, and in a hurry at a low cost. And the friendly regulatory environment is way better than a lot of other states. I could file a permit on Monday and be drilling on Wednesday. You got to build the location stuff, but regulation wise, super easy, super simple, and low cost. Um, our oil deals have a high net revenue, like I talked about earlier. You're looking at 80% plus, low operational costs. We can drill wells 150 200,000 barrels or 150, I'm sorry, 175 $200,000 for a dry hole cost, another 250 to 400,000 for the completion, depending on what type of stimulation and the formation and how many zones there are. We do a lot of 3D seismic, which is just taking a vibration truck around, and they shoot sonar waves into the ground, and the faster it comes back compared to the surface next to it, you got a structure there. It could be full of oil. We also do a lot of fracturing, just regular fracks and polymer squeezes, and there's a lot of different technology out there to decrease the amount of water that is produced and increase the amount of oil. We've got wells producing from the 50s or the 40s that still make, trickle in at a barrel or two a day. 70, 80-year-old wells aren't that uncommon around here. Uh, you go in there, you're looking for a big field. Sometimes you find it, sometimes you don't. You just live to fight another day. And of course, we get the same tax advantages as everybody. There's the intangible drilling costs and the depletion allowance, or the big two. With Trump's big beautiful bill, there's probably some more. I'm not a tax guy, so check with your tax guy for any questions on that. So running through a couple little projects that we got going on right now, just for example, over in Ellis County, we've got a great little Arbuckle deal right in between two old Arbuckle wells. The Arbuckle's the Ellenberger equivalent. It's an Ordovician dolomite, and it's one of the main producers, especially up on the Central Kansas Uplift in Ellis County, Kansas. And in between these two old wells that were drilled 8 foot into the Ellenberger is a nice little structure. And there's potential pay zone just a few feet down below. So by squeezing in there, we think we can get the second break of the Arbuckle and produce some pretty good oil. It worked to the over to the west, and it's worked in the area. Um, these are going to be it's probably, I don't want to say it's a slam dunk, but it's probably one of the lower risk deals that we'd be involved with, and it still has some good upside potential. The wells across the street made 60,000 barrels, 70,000 barrels, so you're looking at a good 10 to 1 plus on your money if everything works out good. Saltwater disposals in the area, everything should be a pretty streamlined, stable, long-term asset on something like that. Another prospect that I got going on is in Logan County, Kansas. It's a two-well prospect in a super exciting area. Uh, it's got about 15, 17 pay zones in through this area, and there's been a huge production to the north, and then it gets real wild to the south and to the east. Been working over in this area for quite a while. They've got a lot of exciting stuff on this one, but it's pretty risky. Wouldn't be surprised at all if we went out and drilled a dry hole, and that's just the nature of the oil business. Another option would be to acquire existing production on wells that are already pumping. The downside of this would be we don't have any tax advantages from the drilling cost, but we do have solid production and it's low risk, with the upside potential coming from the increase in the price of oil or technology advancements, restimulations, stuff along that nature. These investments are backed by proven long-term assets. Once you get an oil well producing, it's going to be a long-term, steady supply of income for the month. And at Sanguine Resources, we serve as the full-time contract operator. We would manage the wells for you, and we'd keep your wells in compliance and actively producing. The other alternative investment is to go with the big names in the industry, the Chevrons, Matador, Fulcrum, EOG, Devon. We screen these prospects and we can deliver them to you for about 20% over the AFE cost. And what that would get you would be a well that's either drilled or about to be drilled, possibly even already getting fracked. And you would step in and pay the joint interest bills and the monthly JIBs, and you'd have and you'd be getting directly billed from a major operator in some of the best resource plays in the nation, in some of the hottest plays. So by doing a play like that, you're gonna make money. You know, you're looking at a 2 to 3 times, 4 times on your money in a decent amount of time. The payback's usually 16 to 18 months, sometimes a hair better. But it's a low risk strategy where if you really wanted to build an additional revenue stream, funneling money into something like that with the top operators in the nation, there's a lot, it'd be a very good, very good potential. So, like I said before, these major companies have the smartest people in the industry, and they have decades of experience and very strong balance sheets. There's a low geological risk with the thousands of wells and all the data that they have around. These operators are focusing on highly delineated plays, the Permian Basin, the Eagle Ford, the Powder River Basin. So the uncertainty of the pay zones is minimalized. They're the best operators in the nation. Super safe, environmental and compliance standards are top notch. And they're putting their money in these wells. Best place to put it's right beside theirs. We can we can get pretty impressive returns, pretty stable returns going through this. Uh, Price of oil goes up, you look pretty smart pretty fast. Price of oil goes down, you can survive a few months until it comes back. The best cure for low oil prices is low oil prices. So, the demand at 104 million barrels a day, we're gonna be cruising right along with something like that. Also, you'd have a long-term asset value with good exit opportunities. If the price of oil goes up, you could cash out for a pretty substantial profit, or you can stay in it for the life of the well. Another avenue of potential investment would be natural gas powered crypto mining. I've got some shallow gas wells, some stranded gas wells that are sitting around, and instead of having those sit there, we could turn them into a natural gas powered crypto mining operation. There's companies all over that do it. With this long-term stable gas, we could set up a little miniature one with 10 units, or we could, fill a whole container with 200 units. If you're into the crypto mining, it's definitely a very hot industry today. It gets rid of the natural gas and keeps your electricity bill. Instead of paying an electricity bill, basically you're paying for the upkeep on the electrical the generator, and we can deploy them directly at location and start mining the cryptocurrency of your choice. It's just another avenue or an additional stream of revenue that we could get into. So at Sanguine Resources, those are my partners. We work together day in, day out to tackle these type of projects. We're looking for long-term investors, just good people to work with. Love to have some of you guys aboard. Look forward to hearing more from you. Let's see here. Got one other little one. All right. My final little deal is a little bit more back on the Kansas. This is a map of the oil and production of Kansas and the area that I work, which is Western Kansas. That Logan Grove project that I talked about earlier, real hot production to the north, and then we're just slipping down on the next little predicted potential trend along there, and you can see that we have a show hole in the Morro Sand made 6,000 barrels there in section 21, and we think we can continue that trend up to the northeast where we have some data indicating that there's some structures right there, and we just hope to be half as successful as some of those people in the north. We'd be in real good shape. Um, that other project in Ellis County with that Arbuckle. We're slammed in a nice little field there to the south. Those old wells with the 28,000 barrels they produced from 1955 to 1963. I'm arguing they didn't get all the oil. And then that stuff across the road that went deeper into the Arbuckle Formation has much better production. I'd be dreaming of getting into something a lot like that. And on a project like that, we could break it down into 1/32 working interest. That'd be about a $20,000 deal, drilled and completed. Uh, we're ready to go on this deal. We could do it in 2 weeks. We could do it in 6 months. Whatever fits the bill on something like that. Love to have some people get involved in a project like that. We've got two seismic locations on a big seismic shoot I did with some guys. These are the highest locations on the survey. I like this one quite a bit. It's a little risky. As you can see, there's not very many wells on the production. There's some show holes. There's a 35,000 barrel well to the southeast there out of the Marmaton. Big pay zones, wild area. This would be quite the gamble. Lots of upside potential, lots of risk. These are the ones that I wake up in the morning for. I get pretty excited about them. Love to find some oil. Let's see. Outside of that, I think I've ready to take some questions if anybody has any questions.
All right, excellent presentation, Sean. Very well put together and thought out. A couple of questions that did pop up. Where do you see the most compelling new oil opportunities in today's market?
I'd like to think that they're in Kansas with the shallow vertical explorations that we do. You can go out there and pay thousands of dollars an acre and fight with the big companies, but we kind of have our own little playground out here. We can do stuff quick, fast, cheap, and as far as upside, I'm not seeing these big, if you spend $100 million on a project, it makes it pretty tough to make 10 or 20 to 1 on your money. If you spend less money, the ROI increases. I mean, 10,000, 20,000 barrel well, and I'm in good shape. 50,000 barrel, I'm feeling pretty smart. 100,000 barrels, I'm dancing in the streets. So to me, with the upside potential, that's why I like to do the shallow vertical wells. Take some risk and generate some wealth by putting a hole in the ground.
Sounds good. A lot of upside potential then. Sounds
Yes,
like.
sir.
Yeah, sounds good. So how sensitive are your current projects to changes in oil and gas prices?
These are long-term 30, 40-year projects. If you find a couple 100,000 barrels today or you find it in 2 years, the good time to find it's when the prices are low. The best way to have 100 barrels a day production at $100 oil is to drill them all when oil's $60 a barrel. So just because we find it today doesn't mean we have to pump it up full out capacity. There's a little strategy to when you sell the oil and when you drill the development wells, and you got to navigate the oil price environment as it's thrown at you. And win or lose, I was busy during COVID. We were drilling wells left and right, super cheap. They're producing today. The economics on those are as good as anything because we drilled them so cheap. So to me, it's not as important of when you put the bit in the ground as to your long-term development plan and gaining the knowledge to know where you want to go next. Or hey, once oil hits $100, I want to do this frac, I want to do this acid job, I want to drill this development well. Having a game plan to be in the position you want to be when the market is where you want to be. And right now, I think it's a great time to buy.
Yeah, especially with all the incentives, right?
Yes, sir.
Uh, yeah. So what kind of income stream and timeline should investors expect from these projects?
Super fast, super fast. If we put together a project, we could be drilling it in in about a month or less, and then the turnaround from when you're drilling to when it's first producing is usually less than 2 months, and then finally getting the check from the crude oil purchasers within a month after that. So the monthly revenue would start realistically in 3 to 4 months and go for the life of the well.
Okay. Uh, what would you suggest as far as like, say, a retail investor that hasn't really done a lot of energy or oil investing? Where would they start, and where would they look, and how
Start
would they start?
slow. Don't jump in and take 50% of a well. Jump in and take 10% of 5 wells. Work with people that you trust. Work with people that communicate with you well. People that you can talk to. Relationships on are very important in this industry. You're not going to make it very long doing what I do if you can't manage the vendors, the service companies, and the investors. So you have to work with people that have some experience, have done it before, and just people that you trust. Trust is important in this industry, especially if you're going into something that you don't understand or that you don't fully comprehend. You're putting a lot of faith in the company to take good care of your money and to be a good steward.
Yeah, that sounds very solid advice. Thank you. See if I can find another question here. What lessons have you taken from projects that didn't go as planned, and how those shaped your approach today?
Well, I mean, there's lots of things that don't go as planned. A dry hole's only the second worst thing that you could run into. Um, there's 5 things worse than a dry hole. There's 1 barrel a day, 2 barrels a day, 3 barrels a day, 4 barrels a day, or 5 barrels a day. So, the lesson for me and what I like to live by is if it's a bad deal, if it's not going to work, cut your losses, plug the thing with cement and move on. It's not worth your time to spend time on something that isn't going to make any money. And so I think that if you take your risk money and you drill the hole and it's not what you're looking for, move on. Don't sit there and try to make something out of nothing. I wake up in the morning and some days are better than others. Some days the rig catches on fire, some days people die. I mean, there's worse things than losing a little bit of money on something, but trying to keep it all in perspective and just waking up and trying to do good, I guess.
Yeah, yeah, kind of a forest through the trees, right?
Exactly.
Yeah.
Exactly.
Well, I think that wraps up for the questions. If I could ask, what's the best way for the people watching this presentation? What's their next step if they're interested?
If you want to get in the small time oil and gas business, just give me or one of my partners a call at the contact on there. Check out our website, sanguineresources.com. Love to work with some new investors and get some people in on some mailbox money.
All right, perfect. Thank you, Sean. And excited to hear you speak for your first presentation. I think you did an excellent job.
Well,
Um,
presentation very poor, oil prospects very good.
as long as the prospects are good, right?
That's the way I feel about it.
All right. Well, appreciate it, Sean, and we hope to see you at future events.